Hi, everyone. I will just take one more minute as you have people joining in here. Um, all right. Okay. All right. We got a lot of people joining the call here. Um, my name is Nachman Leeser, and I am the founder of Connect Books. And today I will be showing you exactly how do we reconcile inventory to gain the proper accuracy, especially dealing with Amazon. All right. So this is something that I've been working on for a while. I can say I've been working on this, for over a year, and a lot of it, and there's a lot of challenges with the back and forth. And the main problem that I always faced was that when I wanted to reconcile inventory, when I want to, one second. So when I want to reconcile inventory, my challenge that I always faced was that let's say, for example, we're showing on the books $1 million worth of inventory. And at the end of the month, we do a reconciliation, we find that we only have 900,000. So now I have to write off $100,000. That was always a big problem because the customer would always ask me and say, okay, can you tell me where that inventory is? Like you're saying that we lost $100,000 worth of inventory. The question is, where is that $100,000 loss? Where did it go? That was always my challenge when it came to reconcile inventory, especially with Amazon, because there's so many moving parts and so many different things. So I'm going to show you a new feature, which is called the Ledger Report, and explain to you how this works, how this is very different than the traditional way that we've been doing up until now, and then how you guys can implement this in Connect Books and have this, working properly for your accounting system. So let's dive into this. And I just want to say we will have a Q&A at the end. So if anybody has any questions, Colleen, I hope do we have the Q&A enabled or just the chat?
Yes, the Q&A is enabled.
All right. So if anybody has any questions, just post in the Q&A. And as soon as I finish, I'll try to, we'll go through each and every question and answer each one individually.
Yep,
All
and
right.
we're
So
recording this as well. So if you need to share it with anybody else on your team or watch it again, we will be sure to send you the recording via email as well.
awesome. Awesome. Thank you so much. All right. So let's dive into this. So what we do these days is there's something in Amazon called the inventory ledger. So if anybody of you go into Seller Central and you go to reports, fulfillment, you'll find a report called the inventory ledger. And we started to use the inventory ledger as source of truth. And that really would go back to how we get to it. So for example, what is the old flow and what is the new flow? So what I want to what I want to try to separate and differentiate here is that there's something called a perpetual inventory. Now, perpetual inventory basically means that every time a product sells, we do two transactions. Now, for the accountants that are on the call, they'll understand this more in journal entries. But for an example, when a product sells, you'd want to, let's say, credit sales and debit AR or debit cash, depending on the method. But besides doing the first journal entry where you want to record the sale, which let's say a product sells, let's say for $20, so now you basically have $20 income and $20 cash. The next thing you also want to do is record cost of goods sold. So let's say the product costed you $10, you want to take $10 out of inventory and put it as an expense of cost of goods sold. So every time you record a transaction, you're doing if you're running a perpetual inventory basis, meaning which ConnectBooks technically is doing, where basically every time a product sells, we do two things. Number one, we record the sale. Number two, we record the cost of goods sold. Now, the way we used to do everything in the past, and especially when we send the data to QuickBooks, is the old flow was really much based off the settlement. Now, I know there's different questions about deferred and other stuff, which I'm not going to discuss on this webinar. If anybody has any other questions about how we deal with deferred orders, I'm more than happy to properly explain that. But the old flow was basically settlement driven. Basically means to say like an order shows up in the settlement report. So we take one unit out of inventory. So let's say a product will show up on the settlement report, and let's say the product, let's say sold for $20. And then let's say the ConnectBooks, let's say the person put into ConnectBooks that the cost of that product was let's say $10, then ConnectBooks would say, okay, so let's record a sale, $10, I mean $20 income, and then let's take $10 out of cost of goods sold. Now, what happened with the refund? So let's say, for example, if I buy something on Amazon and I decide today that I want to return it, as soon as the refund posted, we automatically do two things. A, we deducted the money off the settlement, meaning let's say we said, okay, now you have a loss of $20. And then what happened to the inventory? So the inventory we always used to put back, meaning to say, let's say the inventory was, let's say the product costed $10, we'd put $10 back into inventory. Then we added a feature, which I mean, this is already like a while ago, probably more than 5 years ago, which would decide whether the inventory was sellable or not. So obviously we don't want to put back everything into inventory because if I sell you, let's say if I sell you a product for $20, right? And let's say the product cost me $10. So now I made $10 profit. If you give me back the product, I have to give you back now your $20. So the question is, how much money did I lose? Did I lose $20 or did I lose $10? There depends if the product is sellable or not. So if the product is sellable, then really I only lost $10 because now I have an asset that's worth $10 that I can sell again. But if the packaging is ripped and was used and I can't, let's say, use it, let's example like a pair of shoes, the person walked with it, then I'm not going to be able to resell it. Then I technically lost the full $20 because I gave the person back $20 and he gave me back something that I can't sell. So what we used to do is when a refund came back, we put it back immediately to inventory. Then we would decide whether it's sellable or unsellable. And based on that, if it was sellable, we left it in inventory. If it was unsellable, we took it out of inventory. Then there was another challenge. What happens to reimbursements? So I know the process has changed a lot these days that Amazon automatically reimburses you. But let's say Amazon reimburses you January 5th for, the opposite way. Let's say January 25th, Amazon lost 100 units. Now, whether you open a claim or not, let's say the reimbursement happens on February 10th. So the way we used to do it is once you got reimbursed in the settlement report, we say, okay, now we know that Amazon, now we know that, let's say you got $20 for one unit. So we say, okay, you got income for $20 because Amazon paid you $20. And now, okay, this product, let's say cost it 10, let's take $10 out of inventory and let you do it that way. So basically the way how we are calculated for reimbursements was based off the settlement. And there was negative reimbursements, positive reimbursements, clawbacks, all the other stuff, whatever it was, we always did it based off the settlement report. Our new flow is different. What we're going to do is take where the order still goes based on the settlement report, but basically all the other stuff we do based off the ledger report. Now, the idea is very different. So the challenge with this happened and is that when you wanted to reconcile inventory, it didn't match. What I mean to say is, let's say, for example, Amazon lost 100 units January 25th in FBA. But if Amazon reimbursed you February 10th for it, ConnectBooks would only take out the inventory of February 10th. So when you try to reconcile your inventory January 31st, you have to adjust for those 100 units because when you pull the inventory report from Amazon, it's going to say you have 100 units less. And the same thing with the refunds. If ConnectBooks puts it back into inventory and Amazon hasn't received it, and I'll explain to you even how refunds work. When I, let's say, return something on Amazon, as soon as, let's say I buy a pair of shoes and decide to return it. Now, as soon as I print out that label, and UPS comes to my house and scans that label and UPS picks it up, at that point, I get back my money. Now, then it can still take 3-4 days to make its way to Amazon's fulfillment center. And then until Amazon inspects the return and decides whether it's sellable or not sellable and decides to put it back in the seller's inventory, it can take another 3 to 4 weeks. So if every time a return comes back, you rather put it back into inventory, then how are you going to reconcile your inventory? So what we've done basically is our new flow is that we pull two different reports. We pull the settlement report, which basically we use for the financial transactions. We pull from there the sales, the refunds, the reimbursements. Then we also do is we pull the ledger report. Now, the benefit of the certain benefits of pulling the ledger report, and we'll explain a little bit more, but what we do from the ledger report is we get all the inventory transactions. Okay, so for example, what is the ledger report? The way the ledger report would work. I'm going to jump back a second to this. So the ledger report works like a bank statement. Okay. So if you have a bank statement, let's say you would see in your bank statement beginning deposits, you see your beginning balances plus checks minus, you see your beginning balance plus deposits minus checks, your ending balance. That's what a bank statement looks like. And that's how we do bank reconciliations, right? We always have an ending balance. The same thing is with the ledger report in Amazon. So Amazon has a ledger report, which I explained to you how you can find it. If you go into reports, Amazon, fulfillment, you'll find the inventory ledger. So it has a beginning balance, meaning you can do start a day, start a month. Then you have, let's say, so when it's you ship inventory from your local warehouse to FBA, they have how many they received. Then they have how many they shipped to the customers. Now, then they also have how many returns were processed. And then they also give you loss or damages plus found, and then they give you an ending balance. So the inventory ledger report in Amazon gives you a full-fledged reconciliation of how the inventory works. Now, what ConnectBooks does is we're now pulling these two reports simultaneously. We're pulling the settlement report, plus we're pulling the ledger report. And what we're doing is like this. In order to determine cost of goods sold, we're gonna utilize the ledger report. Let me go back to my previous slide a minute. So the ledger report gives us all these inventory transactions, as I showed over here. Like it's going to give me returns processed, loss, damage, all that. So when it comes to calculating cost of goods sold, the way we do it is we will look, okay, so let's say Amazon put back in the seller's inventory this month, let's say 10 units, and each unit cost of $10. Then we would say, okay, so now we have $100 less the cost of goods sold this month because we got back 100 units. So it means to say is like, let's say I go and I return a product on Amazon. As soon as UPS scans it with the new feature with the ledger, we're not putting it back to inventory. So let's say Amazon gives me back my $20. What we do is we'll take $20 off the sales. We'll say, okay, so in terms of gross sales, instead of let's say $100 this month, you did $20. Now, in terms of the inventory, we'll say, okay, the inventory, we won't do anything at that point. Now, when the inventory gets received by Amazon and Amazon inspects it, then at that point, once Amazon inspects it and puts it back in inventory, there'll be a condition. Okay, so if, for example, the inventory is sellable, ConnectBooks will put it back into a sellable warehouse. If the inventory is not sellable, then ConnectBooks puts it back to an unsellable warehouse, and I'll show you soon around how that works. So the idea is that when it comes to the sales and the cost of goods sold, we are calculating it differently. And when you calculate it differently, you're able to properly reconcile your inventory and probably, come onto a proper amount. So the idea is that we use the inventory ledger. And one of the reasons why it's important to use the inventory ledger is the inventory ledger is like a bank statement. You could reconcile against it. It has a beginning balance, it has an ending balance, and you can make sure things matches. So this is how I showed you before the other slide. So this is an example, here's the example we spoke about. So January 5th, the refund gets issued, customer ships it back January 7th, Amazon doesn't inspect it till February 20th. So for example, we would record the sale, like we would take the money part, we right away take off based on the settlement would be January 5th. However, we wouldn't calculate at that point any cost of goods sold. We would only calculate the cost of goods sold February 20th when that goes back into Amazon. And the idea of that is that that's how you're able to properly reconcile. Let me show a little bit for a second what that would look like. Give me just 1 second. So over here, I'm going to share my screen. And as you see over here, we made a little updates to the ConnectBooks reports. Like you see a sales quantity, refunds. We used to have one column. And one of the main reasons we changed this all was that in terms of to be able to properly display the transactions. So for example, in this account right over here, we have something called financial transactions, and we have something called cost of goods sold transactions. So the sales and the cost of, meaning sales is basically whatever was shipped. Those usually are going to match. For example, here you see 2151, here you also see 2151, right? So the idea is that we have different quantities on different tabs. So for example, so the sales, that still stays the same. How much shipped, because that always matched. For example, in this case, in this month, we had 37 refunds, which Amazon gave back to its customer. Amazon gave back to customers $1,800. plus 5 replacements, which were sent out at $0. But the idea is that these 37 were issued to customers. So the seller lost 1896. Now the question is, how many of these 37s are going to be sellable, not sellable? That we don't know until that's going to make its way back to Amazon and Amazon inspects it. Now over here, when you go to cost of goods sold, you'll see there's something called FBA system adjust and FBA returned. So FBA returned, that means to say there were 16 units that actually made it back to FBA in this time frame. So we made a negative of 403, which we put back into inventory. So the idea is that we're going to treat these two columns completely separate. And I just want to say one thing, this feature is not forced to anybody. You can still use the old way if you prefer. But the idea is that we're going to start calculating cost of goods sold differently based on FBA movements, based on what's happening in Amazon, not based off the settlement. If you look at a different product, for example, this doesn't have, let me see. Over here we have disposed. For example, so basically, now that we're pulling the inventory ledger, we will have every single inventory transaction that's happening in Amazon. So we categorize in a few different categories. We have disposed, returns, we have FBA system adjust. So for example, Amazon finds or Amazon loses, that all gets affected in your cost of goods sold. Because if Amazon, let's say, lost today 25 units, we will deduct 25 units out of inventory utilizing Connect stock. If you're utilizing the Connect Books inventory, we will deduct 25 units out of our inventory system, and then we will also record it here as a loss. Now, if Amazon reimburses you, let's say next month, the next month you'll see like an adjustment over here. But for example, you see here the adjustment is a single unit, and here we have FBA system adjust -4. So it doesn't, meaning to say the amount of reimbursements Amazon gives you does not really reflect how many units Amazon actually lost that month. You might have to open cases or follow up and make sure they give it. And for example, disposals, removals, returned, all now get properly accounted for because we are tracking the FBA, all FBA's movement. So over here, you can see FBA system adjust, FBA system returned. Then you have additional replacement, and then you also have regular returns. These returns has to do from different marketplaces as I'm running the report based on more than one store. So like if it's Walmart, it's going to work differently. This is specifically just for FBA. So let's go back a second to our slides. But the idea what I'm trying to explain is that we are going to use a different method to come up with our cost of goods sold calculation for our cost of goods sold than in terms of coming up to our sales. And that's why we have two separate columns. And also, if you notice, the quantities are different. Meaning one of the challenges we had with designing this was that we used to have, if you remember our old UI, there was another column over here called quantity, and that was usually like a total of quantity. That's why we took the sales and refunds put up here. And then the rest of the quantities, which is basically just adjustments to understand what our total profit number is, will show up here in the subledgers over here like this.
Nachman, before we move on, we do have a few questions that might be good to address
Sure.
while we're on the topic here.
Sure.
So one is, will this give us the ability to see on-hand inventory in Amazon through Connect Books?
Yes. So this feature, basically, the idea of this is more that people who utilizing. Let me go back to share my screen a second. So one of the things where ConnectBooks has is if you go to our inventory report and you run an inventory summary report, right? So what happens is now that ConnectBooks has a full inventory feature, what we were finding is that when people try to reconcile the FBA warehouse, let me jump a second into another slide, and I'm going to come back to this because we have another slide showing this. Let me just show this right over here. So let me discuss this part of the FBA, and then I'm going to tie back into your question. So with Amazon, the way we have is we call it the three warehouses, which is basically called a clean reconciliation end to end. So the idea is you start off with a default warehouse. So if you're utilizing ConnectBooks and you're utilizing our inventory function, you would enter your bills into a default warehouse. And then what we do is we pull all Amazon shipments. And then every time we pull an FBA shipment, we take the shipment out of the default warehouse and we put it to an in-transit warehouse. And then when Amazon receives it, we take it out of in-transit and put it into FBA. So the idea is when you have three warehouses, you can technically reconcile the inventory. Up until now, like a lot of people were tracking inventory in QuickBooks or where there wasn't properly a way of differentiating inventory between the three different warehouses. And the challenge that I faced is that in order to properly reconcile the inventory, you have to have them separated because there's so many moving parts. Like you have to understand, okay, how much is my 3PL? How much do I have on the way to Amazon? And also, there's no report on Amazon what's on the way. I mean, there is certain reports that give you like forecasting, but if you forget to cancel shipment or something like that, it all gets messed up. So to have a true value of what's on the way to Amazon and then understand what's an FBA was always very complicated. And in terms of inventory, the first thing is you want to have a proper reconciliation. And what I always say is for especially for an inventory-based business, your biggest expense in the P&L is going to be cost of goods sold. Your biggest asset in the balance sheet is going to be inventory asset. So, and those two stuff you want to make sure are 100% accurate because, and the challenge with those things is that they don't reconcile through a bank, right? I always tell somebody if it comes to expenses or payroll, you can always check with Clear the Bank and reconcile it against it. With inventory, there's no bank account, right? Because that's why we're doing accrual-based accounting. And that's why it's important to have a proper system where we can reconcile the inventory and to make sure that the cost of goods sold number we're telling the clients are the real cost of goods sold number. So since Connectix has these three different methods, meaning there's three different warehouses, what happens is when you try to reconcile this FBA warehouse back to Amazon, now the way you would reconcile this FBA warehouse is by pulling the ledger report. The benefit of pulling the ledger report is it's available in historical. You can go now and see what was my FBA inventory as of year end. You put in the date and pull the quantities with the inventory, and then you could come back to ConnectBooks and match it. Now, you don't have to manually do it. Go back to Amazon. One of the things you could do is if you go in ConnectBooks, we have a feature. If you go to adjustments, we have something called the bulk adjustments. With a bulk adjustment, you could do something called an FBA adjustment. And this is a dummy account, so I'm not really connected to Amazon, so it's not really going to work. But when you do is you basically do an FBA adjustment, you select your warehouse. Okay. So let's say when you set up Connect Stock, you have like an FBA warehouse where you track. And then what you do is you select the store. Once you do that, you select the date. Okay. So for example, I want to do year end. Now, then we're gonna discuss them in it's sellable or unsellable. But the idea is that when you do the FBA adjustment and when you press import, what ConnectBooks will do is go to Amazon, take the ledger report as of this day, pull out the sellable inventory, and compare it to what we have and create the necessary adjustment for you. So you don't have to do the work. The goal is we're trying to do the hard work behind the scenes. And I'm currently utilizing this inventory feature for a lot of our clients that we do bookkeeping for. And the thing what you don't want to have with this feature is like a huge adjustment, right? So what was the challenge? We constantly adjusted inventory at the end of the month because we wanted the accurate number. Now, for example, if someone has an inventory in FBA for $1 million and you're doing like a $50,000, $60,000 adjustment every month, the guy's going like, what's going on here? We need more clarity. But if you utilize a new feature where we don't deduct inventory based on the settlement report, we deduct inventory based on the ledger report, then our adjustments are minimal. They're like under $1,000. I'm talking for like clients who have inventory worth 1.2, 1.3. You're talking about adjusting inventory for under $1,000 in order to get it to match the ledger. So the idea is that if you could utilize the FBA adjustment and you could match it directly back to the ledger report, that's how you know your inventory is accurate. But the challenge is that you don't want to make huge adjustments. Meaning you don't want to make 50,000. Now, the first 2 or 3 times you might have to do that, but after that, you should start being consistent because it's going to take you 1 or 2 adjustments to get everything in order. But after that, you should start being consistent and not having to make huge adjustments. These can also go based on a schedule. Like you can do a schedule. You can do an FBA adjustment that it's automatic which stores, and you can do like a frequency. So let's say, for example, if you want this to adjust every single night, you could do daily, weekly. Depending on the use case of ConnectBooks and how you're setting this up, you could set this up on a schedule, and then ConnectBooks will automatically adjust it. But going back to what I was saying before, if you're going to utilize the old way how ConnectBooks was set up, that we mainly utilize the settlement report, you might find yourself with big adjustments. And you're like, why are we making so many big adjustments? Versus if you utilize the ledger report, where that's when we're following all the movement happening in FBA, then the adjustments will be down to a minimal standpoint. So I hope that answers the question of how you're able to see your FBA inventory in ConnectBooks. Let me see, what are the other questions we have here? Colleen, are the questions in the chat or the
Yeah,
Q&A?
they're in the chat. So Martin was asking about the disposed inventory.
So if disposed, then ConnectBooks will take it out because since we're pulling the ledger report, basically ConnectBooks will record the disposed as an expense. As I showed you before, if we go to our P&L and you would see it, if you go to the P&L, you would see new transaction types that you didn't see before. And part of that would be, let's say, if you look under cost of goods sold, it's going to be FBA disposed. So for example, Amazon disposed a single unit, so we're taking $7.80 out of inventory.
Now,
And
he's asking if there's a lost transaction for the inventory that Amazon disposed of.
what do you mean a lost transaction? Yeah, correct. We create a loss. So one of the other nice things about ConnectBooks is, and when you utilize ConnectBooks, is that when we create, you have the option to create a bulk adjustment, but anytime you create an adjustment in ConnectBooks, utilizing our inventory, over here you could do something called include in P&L report. Now, when you take this inventory adjustment and you include it on the P&L report, then it will show up on the profit and loss when you run it. So usually what I do when I work with clients, like the first adjustment that I do, usually like just to get the inventory straight, I won't always include it in the P&L, but afterwards going forward, you want to include it. And by the way, this is huge because most of the other analytics tool that you look these days to understand how much profit you're making don't include adjustments. You know how much inventory gets lost in warehouses, you know how much inventory sits around, you know how much inventory never gets written off. And what I always tell people, inventory is the number one silent killer when it comes to an inventory-based business because there's so much inventory moving in, in different parts, and you're not really understanding like how much inventory I'm actually losing. So when you create an adjustment, let's say for example, you want to adjust from your local warehouse, or you do an adjustment to reconcile your Amazon's inventory to ConnectBooks inventory, then when you do that adjustment, you can do something called an include P&L. And when you turn this on and you run the profit and loss report in ConnectBooks, these will show up as part of your cost of goods sold calculation. So that answers that question. If you don't use ConnectStack, so really the question is the idea of more trying to think for a second. I have to check. I believe that we have the feature, meaning I believe Martin is not tracking inventory in QuickBooks either way. If you track inventory in QuickBooks, then I think the feature could be utilized as well. But if you're not tracking inventory in QuickBooks and not in ConnectBooks, then I'm not sure about that. I guess Martin will have to discuss after the call exactly to see how to do this for you. Yeah, so let's get back into this. So the idea really is that on the report, we will have two different calculations, one for cost of goods sold, one for the financials. We will be taking the inventory here. So we will be taking like this. So when it comes to the settlement report, we pull the financial transactions, the sales, refunds, reimbursements. For the inventory ledger, we get inventory movements, customer shipments, lost, found, and returns in process. Utilizing this, you'll get a very accurate picture of your cost of goods sold. And plus your inventory reconciled, that's really going to be good. Now, in terms of financial transactions, so let's say, for example, when it comes to sales, that's a financial transaction, customer shipment, which basically on the ledger report, you'll have something called customer shipments, which that's going to basically be the sales that Amazon shipped out. When it comes to refunds, you'll have returns process, which that's going to come from, meaning that comes from the ledger report, and the dollar amount comes from the settlement report. Now, reimbursements, the dollar amount of how much Amazon reimbursed you comes basically from the settlement report. The lost, damage, or found, that's going to come from the ledger report. So basically, our cost of goods sold is based off the ledger report. Our financial transactions are based on the settlement report. And then when we combine those two together, then that basically, will give you it will give you real clarity on, what's happening. So I want to point out another very, very good feature over here. So basically what I've showed you around is there's a lot of, so once you utilize the ledger report, besides that your P&L will be different, and besides that you also be able to include adjustments, we also set up different warehouses. So when we set up different warehouses, the way usually we would set it up is we would have under warehouses, we would have an FBA warehouse, a local warehouse. Basically, so your inventory, when you enter a bill to ConnectBooks, either you would enter your bills to the local or the default, whatever you call this. You'll have an FBA, and then you'll have in transit. Okay, that calculates what we spoke originally. But then we will be adding on another 3 other warehouses. One be FBA unsellable, one be FBA removal unsellable, and one be FBA removal sellable. So what ConnectBooks does is that up until now, every time we had a return, it would go into a warehouse, it would go directly back in, let's say, to FBA, and then if it's sellable, we leave it there. If it's unsellable, we take it out. Now that we want to follow the ledger report, if you pull a ledger report in Amazon, you will see there is sellable inventory, and then there is also unsellable inventory. So what ConnectBooks is going to do every single return will go back into a warehouse. If it's sellable, it goes into the FBA. If it's unsellable, then it goes into the FBA unsellable warehouse. Now, from there, you would do a few things. If you do a disposal order, then ConnectBooks writes it off because it's disposed. If you make a removal order, then we have 2 options. So if it's a removal order, then if the product is sellable, it goes into a sellable warehouse. If the product is unsellable, it goes to FBA removal unsellable. Now we have another feature is that if you decide that all removal orders should go in the garbage, then every time you do a removal order, ConnectBooks will write it off. The way I like to set it up is that I have a FBA, you need to have an FBA unsellable because if you want to reconcile the inventory accordingly, then you have to follow all the dots on Amazon. You have to follow everything until removal, because removal is when it falls off the report. So in that case, what we do is every time there's a removal order from unsellable, ConnectBooks has the ability to write it off, meaning I usually don't create a removal unsellable. What I do is I create a FBA unsellable and FBA removal sellable. So when a product comes back to Amazon, it's like this. If it's sellable, it goes into FBA. If it's unsellable, it goes into FBA unsellable. If it's a removal, when a removal order comes in, it's like this. If it's sellable, then it would automatically be transferred out of the FBA warehouse to the FBA removal sellable warehouse. And if it's unsellable, then I wouldn't transfer this warehouse. We would just write it off as a loss. And then that would also show up in the ConnectBooks reports. Now, when the inventory makes its way into the removable sellable warehouse, then once you receive that inventory in your own warehouse, let's say it comes back to your actual warehouse, then you would transfer the inventory out of here into your local warehouse. So basically that gives you like a full scope in terms of like reconciling the sellable and the unsellable. Now, another thing that I want to highlight is when it comes to do the adjustments, when you do the adjustments for FBA, we also have you select the store and you have the ability to do sellable and unsellable. So if you're going to have in ConnectBooks 2 warehouses set up, one for sellable and one for unsellable, which I recommend, and especially if you're utilizing the ledger feature, you'll do 2 adjustments at the end of the month. One for your sellable inventory and one for your unsellable inventory. Now, and then the removals, if it's unsellable, we would just write it off so there wouldn't be what to reconcile. Now, there's one other thing which I also want to highlight is when it comes to in transit. So when it comes to in transit, basically you want to reconcile your in transit inventory, right? So the question is, on the earlier slide before, what I had shown you was that we have our 3 inventories, default, in transit, and FBA. So if we have how do we reconcile the in transit, right? So FBA I already explained. We'll have the FBA sellable, the FBA unsellable. You have the button, and with a click of a button at the end of the month, you should be able to reconcile it very easily. And then you also have the removals, which are also very easy to reconcile. Question is, how are you going to reconcile the in transit? And that I'm going to show you right now what we do over here. So in the in transit warehouse, basically, I know we're working on a certain feature that, like when it comes to dual warehouse transfers, if it's an FBA in transit warehouse, only ConnectBooks should be able to make the transfers, but that feature is not currently live yet. But with FBA shipments, we basically pull every shipment. So what happens is there's a discrepancy, right? For example, if in this case, right, Amazon over-received certain products. So with FBA, basically, we pull every shipment. As soon as the shipment gets marked to ship, we take it out of the local warehouse and we put it to an in-transit warehouse. And then as Amazon receives it, meaning to say, what you usually see, like for example, if you're going over here, what you usually see is out of the if I was to, let's say, do the source, in the local warehouse, right? Basic, um, not sure. But the idea is that there's a dummy account, so my data might be off sometimes. But usually what you'll see is when Connectbooks make the transfer out of the local warehouse to the in-transit, usually it'll be one big transfer. And then when Connectbooks transfers the inventory from in-transit to FBA, it can be multiple transfers. For example, if you send into Amazon 100 units, the transfer from your local warehouse to in-transit could be 100 units. But when Amazon receives it, that 100 could be received over 5 different times. So you might see in Connectbooks 5 different transfers. That's the idea of having an in-transit warehouse because Amazon never receives it in full. Now, the question is, how do you reconcile the in-transit? So to reconcile the in-transit, what you do is you go to Connect Stock, FBA shipments, and you go to shipment discrepancies. So once the shipment gets marked as closed, and only if there's a discrepancy, it will show up over here. So what you do is, over here you have a few options, okay? You can go to actions and you could adjust the discrepancies. Now, when you adjust the discrepancies, this basically means you're doing an inventory adjustment. So for example, let's say I'm like, I don't know, I'm just gonna write up these 14 pieces, you do an adjustment. So when you hit save, this will adjust the inventory and take 14 units out of the in-transit. And as I told you before, you included the P&L because you want it to show up. There's another thing you can do is you could clear in transit. So basically, let's say for example, Amazon somehow, let's say you shipped out, instead of shipping out 500 units, you mistakenly shipped out 400. So then what you could do is you could transfer the inventory back. So you have your source warehouse, you have your destination warehouse, and you make sure to do that as well. We also have the ability to do multi-select. The reason why we have this feature to do multi-select is because what I've seen many times, and it's hard to do with a dummy account, but you also have over here the item name. So meaning if it's the same product across multiple ASINs, a lot of times Amazon can over-receive in a certain shipment and Amazon can under-receive in a certain shipment. So if Amazon, let's say, over-receives 100 units on one shipment and then Amazon under-receives in a different shipment another 100 units, what I would like to do is just create like a wash. Like I don't want to adjust my inventory for that. So that's why we built a multi-select feature. And you could, let's say, adjust discrepancies where it will adjust it based on the totals. This is not a proper example, but the idea is that if you have one shipment that's positive 100, one shipment negative 100, then that will adjust it accordingly. So in that case, it doesn't mess up your inventory. So over here, what you want to do is you want to go through everything that's unresolved and you want to mark it and you want to take care of it. If, for example, you don't want to take care, whatever, let's say, for example, for some odd reason, you really somehow adjusted the inventory, you have the option to mark it as resolved. We will have a feature, I know it's supposed to come also pretty soon, is to, once it's resolved, to mark it back as unresolved, but currently that's not available. Now, the way I'm planning to utilize this feature, I mean, you could have a lot of discrepancies here, but what I also did is I built out the schedule. Now, the reason why I love the schedule, and what I would say is that the the ConnectBooks users that love how ConnectBooks works are someone who's like really going to pay attention to detail and love every little detail. So what happens is, let's say what I had a challenge with this feature was that, okay, so let's say I'm going to go now and adjust my inventory. How much inventory am I going to write off, right? So let's say, for example, if it's 2 or 3 units, I most likely won't look into it. I'll write it off. But if I see Amazon lost 100 units or something like that, I would want to take actually a few minutes to write it off. So what we did is we built out a feature where we can auto adjust the inventory, but based on the percentages, right? So let's say, for example, you want ConnectBooks to auto adjust all the discrepancies. With the schedule, you're able to do that. So you could do the rule to apply after a certain amount of days. So like let's say after 30 days or after 5 days, and then you could do if discrepancy is less. So the way I like to do is I would say, let's say 5 days, and then I would say if discrepancy is less than 10%, meaning to say if the total discrepancy of the shipment is less than 10%, then just create an adjustment. That's what I would do. And I would create this on a schedule, and that would take away most of the adjustments that need to be done. And then if it's a bigger adjustment, usually I would like to look into it. And if I don't have the time, then I'll probably just adjust it. But the idea is that bigger adjustments I would probably not automate. And that's why I created this engine with the percentages. Because originally the way the team designed it was, oh, let's just adjust everything. I'm like, no, you can't just adjust everything because if it's something big, I want to look into it. But then if it's something small, like, I was finding myself, let's say, I believe almost if you're dealing with an account that has a lot of shipments, almost every other shipment has a discrepancy, and you're not going to sit and spend time to chase after every single, unit that has to be adjusted. So that's where, I get the both, so we get the best of both worlds. So this is how you reconcile the in transit. And the other way I showed you how to reconcile the regular inventory, which basically the only thing they have to do manually in order to have accurate inventory with Connect Books is reconcile the local warehouse, which most of the times is very accurate, and usually because in your local warehouse you don't have too many moving parts. Also, another very cool feature we have when it comes to adjusting inventory is that you can import inventory adjustments on a spreadsheet. So you download, let's say, for example, you want to adjust your local inventory, you can take a template, you download the sample template from here, you put in the item name, the quantity, and you bring it to adjust. Now, ConnectWorks has a very cool feature, which is called adjusted to. So let's say, for example, when I used to track inventory in QuickBooks, if I would see product A, let's say, has 100 units in stock. Now I would make a cycle count and I would see that really we only have 80 units. So I would have to download a report from QuickBooks, okay, and then take my cycle count, figure out the difference, and then upload an adjustment to QuickBooks to adjust 20 units. So we decided we're going to make it very simple. You could upload a sheet, how much inventory you have, and you could say adjust to. Meaning, let's say, for example, ConnectBooks, doesn't matter what the number of ConnectBooks is. But if let's say you have, sometimes people have like different softwares or Google Sheets will have just for the local warehouse. So let's say if you have a different software that has the inventory of the local warehouse and you want to adjust your inventory in ConnectBooks to the local warehouse, what you can do is an adjust to, where let's say, for example, you take the sheet and the sheet says 80 units, you make the adjustment type be adjust to, upload it to here, and that's going to adjust the whole thing. So that's a very, very cool feature. It saves a ton of time. And then once you upload it, whatever, you select the warehouse, you do adjust to, and you can do adjust the quantity. Like, for example, if you just want to, let's say, oh, today we lost 30 pieces, you're not actually making adjust to, then you could just upload adjustment, whatever way you want. And you have the option to apply the default cost. Once you upload the adjustment, it will appear right over here. You can open it up. If it's not good, you can right away delete it. And also, as said before, include in the P&L. So here's all your inventory adjustments will show up. And you could also send it to QuickBooks and you have more features over here, stuff like that. So, and the same thing also what we discussed before, you can also do a schedule versus the in transit, you have the ability to do a schedule with a discrepancy versus this adjustment, you could just create a schedule and you could also do a bulk adjustment. There's also another very cool feature. If let's say you want to adjust the local inventory and you don't want to write off the whole thing, what you can do is something called clear negatives. So for example, let's say you want to just clear all the negative quantities. Usually that would be more for like your local warehouse. You can do like that and you select the date and then it clears out all the negative inventory. So that's really what I would say more of a wrap around how we can reconcile FBA in transit to FBA, local warehouse, removals, unsellable returns. And as a side note, we also have features available for WFS, not as far as Amazon. We're working on building more features, but you can do the same way you can do a bulk adjustment for FBA, you can do the same for WFS. In WFS, we don't pull yet the ledger report. WFS does have that ability, which was a recent addition, but we don't pull yet the WFS. I mean, sadly, the numbers that we see is not the same on Amazon as WFS. So, meaning, but at the moment, WFS would pretty much work the way it used to work up until now. So back to our slides over here. So this is the idea we have. So if anybody is looking to get this new system implemented, the real thing is mainly for Connect Stock. That's where it's going to come. So just reach out to open a chat on the website and just to enable the ledger report for inventory. And then usually we'll have a start date. The thing is the reports will be a little different. So usually you'll have a start date, let's say as of January 1st. And then once the start date is there, you'll be able to get everything properly set up. And then from there on, you shouldn't expect, any huge inventory adjustments at month end. So the FBA shipments page, that's what I showed you before. That's going to be more to reconcile your in-transit inventory and to make sure that you didn't do it. Another thing also, every adjustment you make, you have the ability to put it on the profit and loss report, so it gets properly accounted for, and it should be properly accounted for. Same thing also is that we have, as I showed you before, we have the ability to upload Excel sheets, and you could do cycle counts. We also have the just to inventory, where ConnectBooks auto calculates the differences instead of you looking how much stock there is in your inventory system and then calculating the difference. We will do that for you. So if anybody has any other questions, I will stick around for another 2-3 minutes. And feel free to put anything in the Q&A. If anybody wants to get started, just the best thing is reach out to ConnectBook support. We'll do the best to help you. We also have a WhatsApp community that we recently created. We'll be sharing a link after. We'll be sharing a link via email afterwards, or Colleen, if we can post it in the chat, if anybody wants to join our WhatsApp community. The benefit is that I will be active in the community answering questions. And the idea is if anybody has like more advanced questions, or people like feel like certain things are stuck in any places, and I will be there to help out and just try to help people going. Our goal is at this point is to deliver a ton of value, and to be able to deliver value for our bookkeepers and accountants who utilize ConnectBooks. And what I've noticed a lot of times is that we have so many advanced features. Like a lot of features are very they look small. Like for example, something like adjust to, it's like just a little drop down, but that can be like hours of work on our end, which basically streamlines your process and makes your process so much simpler. So the idea is that if you bump into any roadblocks, or you kind of finding like you're not getting a grip in the inventory, something doesn't match up, post on the chat. I'll be there to respond, and so hopefully we'll get other bookkeepers as well. All right. So somebody asked here if the inventory of the local warehouse gets adjusted when shipments go out. The answer is yes. So since we pull all the shipments made to FBA, as soon as the inventory goes out, we will adjust that inventory as well. So that's how the local gets updated probably more than once a day. I think every couple of hours, but the idea is that local inventory should match. So, because as soon as the shipments get marked as shipped, we update it and take it out of your local warehouse. I will highlight one other feature related to this question, is that, and I believe most of you know how this feature works, but basically, if you want to, let me go back here. If you want to reconcile your local inventory, so when you go to reports, inventory detail, let's say I would select a particular product. You have over here, you select a warehouse. So what I would do is select just the local warehouse. Now, when you run a report, you'll see, I don't really have any data on this one. I'm not sure these data on this one, but the idea is that, let me try to find a product that has data. Um, we go to inventory detail. It's not coming up because this is oh, that's by SKU. Okay, let me just I'm gonna run an inventory summary report. I'll show you what I'll do. What I want to show you is how to reconcile the local warehouse. If you have, let's say, questions, let's say, for example, you make a cycle count and something doesn't match, and you want to see, why it doesn't match. So let's say, for example, I take this product over here, and then I'm going to go back to our inventory detail report. I'm going to paste it over here. Now, what I'm going to do is I'm just going to go to the local warehouse. Now, I'm going to show you a very cool feature. Oh, nothing is coming up. It's kind of weird. I'm just going to try to pull something. I'm going to pull this product. Let me go back to inventory detail. Okay, so over here, you see, here's, let's say, a marketplace shipment, so negative 180 units. And then you see over here, there's a bill entered January 1st of 180 units. Now, this probably, in this case, the bill probably came in after the shipment, but that's how in the inventory detail, you do it per local warehouse, you'll be able to find transactions. You could also export it to Excel. And then another thing is you also can select all different type of transactions. For example, if you want to just see bills and see marketplace in transit shipments, like these stuff, meaning let's say you have a lot of FBA motors, you don't want it here, you can filter out whatever you want. Another thing is, this is the most coolest feature. This is called display running total. So what happened, what I was facing is that, let me just take this off for a minute. So when I enable display running total, a new column pops up here called on-hand quantity, which is basically the on-hand quantity from this warehouse. Meaning to say, these two types of quantities. When I run it across all the different warehouses, you will have an on-hand quantity across everything. But when I go back to the local warehouse, okay, and I do display, I don't have an on-hand quantity because I'm filtering down just a local warehouse. When I do display running total, okay, and I do run report, now it gives me a total for this warehouse. So without this checkbox, back in the days, if I would like try to reconcile how much inventory is in the local warehouse, I would need to export it to Excel and look and do a calculation. That's why we added on this little checkbox to make it easier. So you can see over here, you display running total. So that's gonna also help you reconcile your local inventory. All right, if anybody has any other questions, I'll be more than happy to answer. Let's see, that's in the Q&A. And then on the chat, let's see. All right, I thank everyone for joining, and we will be sending out the recording shortly.